Hey everyone, and welcome back to another video for today. So in today's video, it's probably going to be a shorter one because we're just going to talk about one company. It's one of our favorite ones, which is SoFi. Now, SoFi for the time being, or at least when I'm recording this video, is still under $20 per share. And so what does it need to do in order to get back to $30 a share, maybe eventually to $40 a share? That's the question, because everybody's been saying, oh, SoFi should get back to $25 to $30, 45, 75, right? We know the thumbnails, we know the titles. But realistically speaking, what does the company need to do in order to get back to the high 20s, low 30s, and eventually go even higher than that without us being at meme level of pricing? Right? Without us being at 100 times PE, 200 times PE, 50 times sales, or things like that. Because it's one thing to go up, and it's another to go up, but the fundamentals don't really make, well, there's no correlation. They don't make sense. There's no correlation between the reality and the stock price. It's cute. Let's say tomorrow we're at $40. Great. If tomorrow we are at $40, I might maybe take some shares off the table if it is happening tomorrow. If it's happening a year from now, 2 years from now, probably not, because I do think that we are going to get there eventually. Now, as you know, SoFi right now is already experiencing quite a big and aggressive drawdown. Over the past 12 months, the stock is still up 16.7%, but it is experiencing a drawdown of 39%. It peaked a couple of times, actually 2025. But yeah, we are experiencing a drawdown of 39%. And this is not because the business has not been performing well. No, we were here at one point at around, what was it? $32.21. Yeah, we were hovering around $26, $27, $28 or so for a couple of months. And then, yes, actually the start of this year has not been great at all. Just this year alone, SoFi is down 28.5%. And again, this is not because the business has not been performing well. No, just general sentiment around AI tech stocks and also financials has been very bad. Now, yes, we've seen regional banks and things like that actually perform a little bit better. But it seems like SoFi gets put into that tech basket because, well, some people won't like to hear it because, yeah, SoFi might have a bank, but it is growing faster than traditional banks, and it is growing at the same pace as a lot of tech companies, and in some cases, even faster than a lot of the software players out there. Of course, when we look at margins and things like that, it's nowhere near at the moment. But to me, seeing these prices right now, SoFi is already a huge position for me in the portfolio. It is and will always be these prices, even in the low 20s, a very good deal. And so before we continue and start to speculate here a little bit, if you enjoy this type of videos, hit all the buttons, we really appreciate it. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now let me show you why SoFi deserves a little premium. Right? If we go here, by the way, this is on Perplexity. Pretty cool what they've been doing with Perplexity Finance. I do think that if they continue to do what they've been doing, they should surpass Yahoo Finance pretty soon, because let's face it, Yahoo Finance is really not such a good website. Anyways, if we look here at the analyst consensus, currently, according to 10 analysts here, the average is a hold. We have 3 analysts that are bullish, 5 neutral, and 2 bearish, with an average analyst price target of $26.75. But that's not the important part here. The important part is this: earnings beat, earnings history. What we see here is time and time again, when SoFi reports, they beat estimates. And they beat estimates, as you can clearly see, quite easily. That's not all. Let's look at revenue. Same thing. Time and time again, we have double beats, and most of the times we even have triple beats for SoFi. And so when we look at SoFi valuation-wise, things like that, if you look at the forward PE or whatever, remember, forward PE is based on analyst expectations. And as we've just seen, analyst expectations have always been too low. And so if we look at SoFi right now, SoFi is becoming a bigger and bigger company. We all know this. SoFi is generating, it's going to be a very weird thing, but we are now going to talk about SoFi in the billions. Each and every quarter, revenue is going to be above $1 billion. That's not all. We are now in the billions of dollars per quarter, low billion, but we are growing faster than a year or two ago. It's a pretty good position to be in, right? And as you remember, Anthony Noto in the latest Tevis and Tanner podcast, he said, if Q1 is our fastest growing segment, he would be disappointed. And so when we'll see the guidance for Q1, it's safe to assume that the guidance for the full year is again going to be beaten and raised. Now, in the meantime, of course, the usual recap here, financial services, still a segment that is growing extremely, extremely quickly. The numbers here are getting bigger and bigger by the quarter. Lending revenue is still the biggest segment, but at this pace, financial services should surpass that. And then, yes, we have the technology platform. I do think that once we see continuous growth in the technology platform, I do think that we should be seeing something good in 2026. The sentiment around the stock will naturally change as well. So what we're seeing is this, an excellent company executing, performing very, very well, growing across the board. And guess what? We are still far, far away from the ceiling. Now, to see the stock go back to $25, $30 and still feel okay with the valuation, a couple of things need to happen. One, a very easy metric to track, and I hope they do give us that metric each and every quarter because it's very easy. It's the revenue per financial services product that reached $104 annually, up 29%. I do think that quarter over quarter, it stayed flat, but that number should continue to go up and up and up as they monetize here across the board, especially SoFi Money, SoFi Invest, credit card, and all of that. If that happens, again, the revenue growth that we are expected to see, this is for a full year 2026, adjusted net revenue growth of 30%. Adjusted net revenue for Q1, 35%. And remember, he would be disappointed if this was the fastest growing quarter of the year. And so 35% in Q1 should not be the fastest quarter of the year, yet for the full year we are seeing 30% growth. Yeah, to me this smells like another beat and raise scenario for SoFi. Same thing here with EPS. For this year they gave us approximately 60 cents. We know that the midpoint, right, that they gave us a while ago, the midpoint would have been 67 cents. Now, yes, they did dilute shares, but still they diluted shares, and yet we're still getting very close to the midpoint that they gave us before they diluted. So imagine where we would have been without the dilution, but it doesn't matter because we are growing. We are becoming more and more profitable. We are becoming a better company, even with, well, not even, but because of the dilution. It was opportunistic. It is not hurting EPS growth. On the contrary, I do think that it's making this company much better, much more profitable today and in the future. And so just based on the numbers that SoFi themselves gave us right now, we can start to put some PE multiples and all of that to see what needs to happen in order to get back to $30 and eventually $40. Now, as we also know, financial services growth for the year, 40%. Lending, 23%. Tech platform, excluding Chime, 20%. We also know the following thing. Over the medium term, management expects to deliver compounded annual growth in adjusted net revenue of at least 30% from 2025 to 2028, and that does not include 2025 growth. Very important thing to note. Additionally, management expects to deliver compounded annual growth in adjusted earnings per share of 38 to 42% from 25 to 28. This guidance assumes there are no meaningful changes in the macroeconomic environment and no significant new business launches or acquisitions, which could or could not happen in that period. And so if we just do some quick math, that means 2028 revenue of at least $7.9 billion and EPS of between $1.02 and $1.12. Now, again here, quick maths. Based on the EPS that we just had, we're trading at around 50 times PE. If we stay with that 50 times PE, based on the 60 cents for fiscal 26, you're getting, correct, you're getting $30 per share. Now, the ideal scenario is that the PE shouldn't stay at 50x, we go lower, but EPS goes higher. That would be the ideal scenario. Then, if we take the medium-term outlook, well, here again, it's not such a crazy thing to think about. If we're going to reach $1.12, maybe if they beat, then it becomes $1.10 to $1.20 or so for 2028. Here as well, what is it? Not even 30 times that year's earnings. Looking at tangible book value, here as well, went from $4.47 to just over $7 in just 1 year. We could potentially exceed $10 to $11, and here, to reach that $30 per share price, 2.7 to 3 times price to tangible book value. Is it that much for this type of company and this type of growth? Not at all. Not at all. And that's the thing. We are currently trading around 50 times earnings. If we reach 60 cents for this year, 50 times earnings, $30 per share. Now what happens if we reach 70 cents or 65 cents? If we're still getting that 50x multiple by the market, if let's say we do see some solid growth in the tech platform, the whole business just continues to perform extremely well, the market is in a good mood and it gives us that multiple again, but our EPS is going to be higher than expected. Then yes, we are going to exceed $30 per share, probably this year, maybe the start of next year. And if not, if the market says, you know what, no, it's now 40 times earnings. Okay, 40 times earnings is still upside from where we're at right now based on the 60 cents. If we still believe that that 60 cents is, well, super low, then even 40 times forward earnings, forward 65 cents or whatever it's going to be, brings us quite close to $30 per share. So bottom line here, it's not that crazy to think that we can get back to $30, which means 50% upside from the price we're at right now. That's the thing. I already own quite a lot, but if you're telling me that I can buy even more shares of a great company, still maybe expect 50% upside over the next 12 months, just because we're going back to where we were before, multiples might actually come down because the company just over delivers, I'd be a fool not to continue to buy these types of shares. That's the thing. I don't understand why people are freaking out. You have the opportunity to buy an amazing company at a much better price, 40% discount from the peak. Now, of course, very few of the SoFi investors bought above $30. Most of us have been buying below 10, between 10 and 20, right? So we're still well in the green. But if you can now buy, we just got this guidance for 2026. We got great comments by management. And yet the stock continues to go down. It stays under 20. I mean, why wouldn't I accumulate? And this is, again, one of those businesses where, is AI going to destroy SoFi? No, not at all. Now, could a macroeconomic disaster put a lot of pressure on the business? Yes, most likely. But a macroeconomic disaster or a geopolitical disaster would put some pressure on the market and every other company in it. SoFi themselves, their macroeconomic picture is not the rosiest one, right? It's not the rosiest one. And so when we're looking at rate cuts, when we're looking at unemployment and all of that, I think there is a nice buffer here for SoFi. Of course, again, macroeconomic disasters, things like that, we don't know, we can't predict that. But what we can look at right now is the business, is comments from management, is execution, and all of that points to, well, SoFi is a great company trading at a great price. And so all in all, that's about it for me in this video. Have you been buying more SoFi shares? If you lost hope in the stock, let me know down in the comment section below. Greetings from the 305. Bye-bye.